Hello everyone. Welcome to the 5th episode of Portfolio Update. I hope everybody is inside and safe and investing consistently. Today we are going to see the new stock that I bought in last few weeks and a stock that I sold partially. Then we will try to explore the reason behind market's crazy rise, even when the virus is affecting more and more people everywhere and the world's economy seems to be going down. And in the end, we will go through the numbers, figuring when the economy will settle down and what the economists are saying about it. But of course, we will go through my portfolio first. So let's start. Did the clap happen? What, was that right? I'll do it again.
Welcome to my money universe. It's time for a new dream that doesn't involve working for 40 years, barely scraping by. Get financial life in order, find ways to save and invest more, understand insurance and tax, everything in my Money Universe channel.
As usual, the portfolio is in red, but it has seen some improvement. It's just 28% down. If you have been following my journey, then you have seen it down 50%. So minus 28% is little better. But at the same time, I was not worried then and I'm not worried now. Before even I started investing, I knew how the ups and downs happen, as I have been crazy about Warren Buffett's life and career, and it kind of gave me the patience and calmness even when my portfolio falls down. Of course, I kept buying in small quantity throughout the market fall, and that helped me in raising my stake in my favorite companies. And in the last episode, you also have seen the biggest investors in the world and how red their portfolio is right now. So the stock that I bought recently is Sunteck Realty. This is Mumbai-based house development company mainly working in luxury segment. I have been on lookout to buy this company from some time, and now it seems like perfect time to go all in. I'm especially interested in only Mumbai-based housing companies with great work ethic, because as you know how fraudulent they can be. And this company seems to pass all of my checklist. They are pretty good with their decisions of choosing land and what kind of a specific segment to go for in that location, and also in optimizing their funds. Optimization of fund is very important when you are in a realty business. In coming next decades, Mumbai is going to do a lot of reconstruction, a lot of tearing down buildings and making new ones gonna happen, which will eventually help these top 6-7 companies in grabbing more and more deals. It is estimated that Mumbai is gonna be the most populated city by 2050, with the population of around 4.2 crore people living in it. And the houses in Mumbai are of astronomical rates already. Here, some of the 1 BHKs cost you around 1.5 crore rupees. Yeah, it's crazy, I know. Right now, this company is just 5% of my portfolio. I would get it to 10% in some time. Right now, I'm more in preservation mode and keeping my cash little safely. I'm still buying every week, but the amount is much tinier than before. In period between March to May, as you have seen in my portfolio updates, I bought stocks of worth around 2 lakhs. But now I'm going little slow because market is going up and up each day, and I don't think it shows the real picture of economy. Okay, let's talk about the stock I sold partially. People who have been following my journey know that it's LT Foods. I have been wanting to sell this company from some time now, not because I don't like the company or anything. It is just that there are other companies which I prefer owning than LT Foods, and now finally they are at my price. LT Foods is doing good, especially how they are trying to get into healthy snacks business, which I so badly wanted them to do from so long. See, this rice business they are into is not of that high margin business, but the snack business is where you can really get a good margin, and that's what they have been doing now. So kudos to them. So overall, I like the company. I got 50% profit from this, so that's alright. It is not like I sold it to book the profit or anything. I have always been a value investor and believed in years and years of staying invested in companies until you see a real reason to go out, and profit making just for 50% profit does not really appeal to me. Now let's see why the hell market is rising. The virus numbers are increasing every day, and now India has the 3rd highest cases in the world. Lockdown mostly still continues and economy is on freeze right now. On June 1st, Moody's downgraded the country to the lowest investment grade, which is just one step above junk status. So why the hell share market is going up? What's going on? There are few reasons I can point my finger to. First is that when the news of virus started going around, then as usual people panicked and sold everything like it's the end of the world. But as usual, human beings after a while get used to of everything. So now it's a new normal for them, and hence they are slowly coming back to market to buy. Even though the numbers are much worse now than what people were thinking. Second reason is, as people are spending more time at home, we have seen a big rush of new investors joining in. The number of new demat accounts opened during financial year 2020 was the most in at least a decade. at 4.9 million, a 22.5% increase from the 4 million demat accounts opened in the previous year. This data is from the Securities and Exchange Board of India. Total demat accounts at the end of fiscal 2020 stood at 40.8 million, up from 35.9 million on 31st March 2019. So you can see how new investors coming in puts more money into the market, and that's how you see Nifty and Sensex going up and up. Third reason is, if you were to look at it from a historical context, whether it was the global financial crisis in 2008 or the Great Depression, when you got into these problems after the early round of correction, there has always been a reasonably sharp bounce back. To some extent, history has supported the fact that even when the immediate outlook is poor, if the stocks have reacted enough, they tend to come back substantially. Fourth reason is that fundamentally there has been a lot of money getting pushed into the system globally. In America, interest rates are almost at zero and Fed is giving away free money to people to help them in this virus situation. So with this kind of liquidity, what typically tends to happen in such cases is that at the end of the day, the money will either be going to markets or it will go to credit. In the initial jump, it tends to go to markets, and that is what you're seeing at this point in time. All the liquidity that has been pumped in is largely finding its way in some form or the other into the markets. The issue is, when does it start going into the credit market, because that is what is fundamentally required. Once that starts happening, it is actually better for the economy from a longer term perspective, because then the companies and the smaller businesses can pick up the credit from the market and put it into their own business to grow, and it helps the economy in growing further. Now let's see what the experts are saying about the time when the Indian economy will be back on its feet. According to a report from S&P Global Ratings, India's economy is expected to recover strongly in its 2022 fiscal year. World Bank also predicts the same, though till then India's GDP will shrink badly according to many global institutes and rating agencies. Fitch ratings say the same. Remember, these guesstimates are just for the time being. There are many things that can still go wrong, but the main idea is that, like life itself, market will go up and down. So don't even try to time it. Be consistent with your investments and stay invested in the times of panic. Hopefully you got some value from this video. Press the like button to let me know and subscribe to stay with me in this journey of making 1 crore rupee portfolio. And hopefully this happens sooner than later. Signing out, My Money Universe.